Hello, this is Ronnie. I am back here with another clip taken from a long video that I just finished to record for my subscribers. I am leaving the option to join my services at 50% off available. If you're interested to have further details, please stay on after the clip ends. I'll be providing more details of that. I also would like you to read the disclaimer that I'm putting up now, and make sure you're happy with the conditions before you go ahead and watch the video. Hope to see you later at the end of the clip. Bye now. This is the long-term chart of silver in US dollars. That is the monthly scale. We do have, the way I see it, two basically options. Either we are dealing with a major C down. If it is correct, it is relating to an A that took many years to form, 1, 2, 3, 4, almost 5 years. So the A cannot be just 5 months. Do you understand? It's going to be numbered in years. And it's going to, of course, take silver to much, much lower lows, maybe to 5, maybe to 4, things that just not, people just wouldn't relate to now. I think that this is somehow looking to me like a scene that doesn't fit with many other things that I see in many other markets. And you can treat silver the way you want, but so far it's been really acting as an industrial metal, very useful industrial metal. It's been acting differently than gold. And of course it has also the precious metals aspect to it, but if we emphasize, if we look at the usage, the industrial metal usage, which is undeniable, that means if we go for this C, that means the world is going into a depression of 4, 5, 6, 7 years in order to deliver this big C. And frankly, I don't see this as a possibility. We already have oil completely smashed. Are we going to see oil going through another 5 years of decline or being very stagnant? No way. It's something that I at least can't see happening. I could be wrong. It could be that I'm really missing something big, but doesn't seem to me likely. So there is an alternative here that only Mr. Market could confirm, but in due course it could be interesting to watch for this possibility. Look, coming down from the top here on the monthly, we have an A, we have a B, we have a C. We have an A, we have a B, we have a C, that will be our X, and then we come down, we have an A here, okay, so we take this as an A, we have this as a B, and we came down for a C. Well, believe it or not, the sharp decline in silver could actually be all what we are going to get on the downside. I'll show you how that is possible. The first thing that will confirm that, in my opinion, will be a run above this level. And that comes just under 20. Of course, by the time silver runs back to 20, gold is going to absolutely explode. Yeah, and then we will have our confirmation from the leadership of gold. Yes, but I just wanted to point out, for those who think that we are locked, yeah, we are completely locked into that C that is going to drag silver to 5, to 4, to 3, I don't know. No, not necessarily. Not necessarily. It could come back. It's possible that it's already coming back. Yeah. So I wanted to provide this alternative that is more likely to fit with what I see happening in many other markets. Okay. I'm going to jump to the weekly. So remember, that's going to be our A. That's going to be our B. Or B could have ended here, but that gives us the C. Now, it is already encouraging that we are seeing silver jumping back above this major support level. Okay, but the pattern in itself doesn't tell us that the decline here is over. It's not very clear. And you know that I'm not in the business of pushing wave counts, because that's the last thing you want to do. You see, this can still play out as a 1, 2, that's 3, that'll be a 4th wave. I told you all along that if we run above the 0.618, we run above 15.5, we build a base here, then this is likely the entire move that we're going to get on the downside, and then there is very strong prospects for silver to shoot back towards 19, towards 20. Okay, and that will be really a sea change. If we get that, that will be a very powerful signal. And as I told you, by the time we do that, gold is going to run way above its recent weekly high. Yes. So this is basically the reading that I have. I think that staying around here and gold not doing much and beginning to sink gradually under 13.76 will open the gate for it to go and potentially deliver the last leg of the 5-wave run that began here. So that's your 1, 2, that's your 3, in that case that's your 4, that's going to be your 5th wave. Okay, and then I would expect it to come back. No guarantee when I say it's going to come back that it's going to go straight there. No, not necessarily. But anytime it crosses back above the support marked here by the move line, it's good news. It's certainly better news than seeing it battling, trying to ride over the obstacle and not making it and coming back to check the floor here. This is bad news. This is bad news. If it builds a base like that under overhead resistance, this is bad news. Bad news because that means it is going to continue down. Yes, if the market is strong, it will do this. And then it will consolidate on top of the support, not under. So that's silver for now. Here's the chart of gold. That's the weekly. We have seen massive margin calls, liquidations. Some indices in the US dropped more than 50% from their record high just a few weeks ago. In short, we have seen mayhem in the markets, and gold throughout all that mayhem kept very close to the previous high. So when you see this huge wave count on the weekly of A, B calling for a C down, my question is very simple. If gold didn't succumb to blind selling, because of margin calls that hit a lot of hedge funds, if gold kept its gains since the bottom here throughout what we have seen up to now, does it make sense that we're going to see multiple replays of what we have suffered up to now that is going to justify gold going there? I don't think so. I don't think so. I could be wrong, but I don't think so. It seems to me that the wave count that is coming more into play here is to treat this as a 4th wave, that the rally that began from here is a rally that has a future. I already said it before, it's a rally that has a future. The consolidation here could take months, but as long as it continues to consolidate between 1,715 roughly and the base here 1,476, going up and down here is sign of strength, definitely. Let's go to the weekly. And what do we have here? We'll have to open it so that we can relate to the entire pattern that is evolving here. So take a look. We did have the dilemma, and we still have this dilemma where the previous move ended. And we said that could play out as an ABC-A, ABC-B, coming down 5 legs. That might have ended here. That'll give you an ABC. Now, the surge here could be taken as an A. That's a B. If it runs back towards the previous high here, but it doesn't exceed that level, this is almost certainly a C. Okay, so do not be carried away that is going to fly through the roof here and continue to run. I would wait a bit. I mean, if you are lucky to have caught it here and you do have a nice run towards 1,700, which would be a $100 run, which is very nice, I would actually work with very tight stops if it gets there, because I would expect this. I would expect it to correct at least back to this level. Okay, so just that you don't fall in the trap of losing all your profits and then going negative. If you enter here and it rallies, you want to be out when it touches this level. If it is destined to continue higher and it is strong, it's going to give you the base building above this, and that will be the sign you want to go back in. It is likely continuing higher. Okay, so that is the reading that I have for gold. I will jump to the 60 minutes and you will see it is attempting to build a base here. It is not terribly clear, and again, I don't want to push a wave count, but this is what I think could do justice to the price action here, with this being 1, 2, 3, 4, 5. I'm a bit struggling with this. I'm struggling because we didn't have a clear break through the floor, you see, and also coming up here, it's not very straightforward 5-leg run. Yeah, we have a 1, 2, but what do we have here? This looks like a triangle, so there is a bit of a dilemma here. This wave count will probably not work if it breaks back under this level, 1,564. If it breaks through that, then expect it to go to the floor. Okay, not necessarily negative, yeah, but meaning calling for a big crash, no. But if it breaks this level, then forget about our ABC. It's not going to play out. If it comes back to retest the high here just under 1,650 and it keeps building nice 5 legs runs, short, very short, then you can trust this to turn out to be our C eventually, okay, with an A, B, C like that. Hello. Hope you enjoyed the clip. I'm back here with some details about my servers currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily servers, daily videos that are preceded by a trial, so you can take the trial for 1 week. And at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still. The information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you great trading week. Bye now.